First-home buyers, what do you need in money to be able to buy your first home utilizing the first-home buyer government guarantee loan scheme? Bit of a tongue twister. What do you need to know about this scheme? What are the benefits? What do you need to have in savings? How much do you need to make in income? What are the potential risks and concerns? I'm going to go into it in this video, so let's jump into it. Okay. You're a first-home buyer, or you know someone who's a first-home buyer and they're considering if this could be a way for them or you to access your first home, access the loan, get the money, be approved, buy your first home. There's some things you need to know, because while this is a good thing, you've also got to know the truth. Can you handle the truth? Let's have a look at it. I've got some numbers here just to give you a quick idea of what you're going to need in savings and income, and a few other things I'm going to go into in more detail in a moment. Let's say we're looking at an $850,000 property. You're going to need, for your deposit and fees and costs, yes, there are fees and costs. You're going to be paying some transfer fees, some legal fees, some pest and building fees. Let's just look at the $850 purchase price as an example for this video. You will need $70,320 to be able to acquire that property. However, there's a few other things you've got to know if you don't already know this already. You will need to be making, single or combined, if you're doing this with a partner, of around $165,000. Why do you need to be making that money? The way banks assess borrowers, firstly, they want to see that they make enough money to be able to service the loan. And after they've done all their calculations and checks, do they have other debts? Do they have other stuff that they're paying? What are their expenses? This is why it's so important for people to understand the impact of credit card debts and store card debts. All those debts can really impact your ability to borrow money at a price point that is going to allow you to turn your goal and dream of buying your home into reality, because it lowers your borrowing potential. So, important to know, how much money you make is just as important as the savings that you've accumulated to buy that property. A few other things for you to know. The savings you'll need to have in money, the income, and this is also, like I said, whether it's on your own or with a partner, or husband or wife, if you're doing this together, that's the combined figure. The other thing is your savings. Your money that you've accumulated must primarily come from being proven as genuine savings. Now, what does that mean? That means that you're able to show that you've been consistently putting away $500, $1,000, consistently putting money away to prove that you can save money, which is one of the ticks from the lenders saying that these people will pay their home loan because they've already proven that they have the discipline to save money. This scheme is not for the person who has got parents or the uncle or auntie who is going to go and gift you $70,000 to buy your first home. Because one of the things that the banks know and they always figure out is this genuine savings? Did you save it? Where has it come from? So we want to be able to demonstrate that you have saved this money and you've put it away. Now, on another topic for another video, and I can send you information, if you have parents that have equity in their home and they don't want to go and use their savings and their trip to Europe or their sleep money, there's a way that we can structure loans for the right people that are in the right financial position, where the children of those parents can guarantee a bit of their equity out of their home, and that they're not pulling money out. There's no borrowing. It's a guaranteed equity loan that goes towards the kids, if that's you, towards your deposit to buy your property, which can allow you to get into your first property. If you don't have genuine savings or enough money and your parents are sitting on some equity, that they would be happy to help use as a guaranteed amount of equity funding to help you get into the first property. Or if you're a parent watching this and you're sitting on some equity that you're happy to guarantee for your kids because you trust them and you know that they'll pay their loan, and there's also going to be a whole lot of agreements that if we were to set this up that you have to sign and agree with as the parents and the kids. This is not a way to lose your home and puts the parents at risk, none of that stuff. But that's for another conversation. Today is about the guaranteed home loan scheme. Okay, so that just gives you a quick indication of the money. Now, I'm going to go and jump over here to go into the detail of the money, and then I'm going to close off on what are the benefits, risks, and what you can do next. All right, so let's dive into the numbers a bit more. What I'm going to do is just focus on this one line here. Okay, I got you. One line here. You're looking at buying an $850,000 property. Yes, 5% deposit under the first home guarantee loan scheme, 5%. However, after 700,000, government stamp duty does kick in. Yes, the government, they're charging fees. So at 850, you're going to pay a reduced stamp duty. So they're going to reduce it, but they still want their bit. They are going to take $21,850, give it to the government. They're also going to charge a title transfer fee, $3,146 to transfer the title to you as the owner. And they're also going to charge a mortgage registration fee. Okay? There's fees from the government. The lender who you go with could have an application fee or whatever other fees they may have as part of the loan setup. Some have no setup fees, but this is just in case. It's just an estimate. You're also going to have to pay for a conveyancer and a pest and building report, which generally comes in around $2,000 odd. Okay, these figures will come to total fees plus your 5% deposit, meaning come starting to settlement, you'll need $70,320 to buy that property. And you're also going to need the single or combined $165,000 annual gross income. That's your income before tax. And your living expenses wouldn't want to be any higher than around $4,000 a month. So if you've got a dependent, a little one, and there's other costs and your monthly expenses are higher than that, that means you're going to need to be earning more money, or you're going to be buying a lesser purchase price property. This is how we do the numbers in finance to determine the appropriateness of the borrowing capacity for our clients to make sure it fits with lender policy. Okay. The other thing to be aware of and know is if you've got any other loans or credit card debts, that's also going to impact your borrowing capacity. But let's just say you tick all those boxes. You've been a good saver, you've put money away, you've got your $70,000, you're making the single or combined income, and that all looks good, and your expenses are good, you're not overspending, and we want to know which lenders would approve you to, let's say, buy a property like this. Let's say we're looking at this $850,000 odd home, southeast Melbourne, near Dandenong. Which type of lenders are we talking about? Well, this is what we get as one of our software tools that we can use as brokers. There's a variety of different tools that we use, but just give you a quick indication of we are looking at when we're doing the numbers for you to determine who would be the lenders that are all checks and balances prior to submission. This is just initial checks. This all has to be qualified with pay slips, savings history, all the other things that we collect as finance brokers to make sure that what we've found in our research actually is going to be approved by the lender. And that's what we're doing for you. So let's say, for example, maximum capacity they'll lend up to with all those numbers ticked. This we want to have in the positive. It's got to be a monthly surplus and what type of interest rate they're looking at. This is an estimate of living expenses. This is the tick that they will accept first time guarantee scheme applications. I just picked those. There's quite a few different lenders. This is not guaranteeing these do this loan for you. This is just an example, just for education purposes. And we are just looking at the potential of who could be the appropriate lender for you once we've confirmed your specific goals, financials, needs, and objectives to make sure it marries with the right lender and you approve that lender for the information that we go through. Okay, so there you go. Just to give you some more information on the specifics and the truth, knowing the truth around the numbers. When we hear it's a 5% deposit and that's all you need, and people are coming and saying, oh, but I only need 5%. No. There are other figures, as we've just realized, that go towards this happening for you. Okay, so I hope you find that helpful. Coming back to our report, our guide here. Now, what can you buy up to as a purchase price under the government scheme? Here are the different figures for the different states. So you can buy up to a $1.5 million property in New South Wales under the scheme as a first-time buyer. You've never bought a property before, or your partner and you, if doing this together, neither of you purchased a property before. You could buy up to $1.5 million property and take advantage of the discounted government fees and charges and the other benefits that come with this loan. But you've also got to make sure you've got the income. You've got the income to prove serviceability, okay? And we can help you work all these numbers out, of course. Here's some details on how the scheme works, and you're also not paying any lender's mortgage insurance, which if you don't know that fee, that is a fee wherever someone is borrowing money over 80% of the purchase price of a property, the bank will charge a lender's mortgage insurance fee that covers them in the event that you can't pay your loan. Doesn't cover you, covers them. So that's how that works. But if you tick all the boxes, you understand your responsibilities, you're a good saver, you've got good income, there's no problem with any of that, okay? But we're in the business of lending money, so there's got to be insurance to protect that. Now, what's the benefits? It gives you the opportunity to enter the market sooner. You can get into a property with less money, and you can also take advantage of the property growth that is occurring in Australia, because we do have a shortage of properties. The sooner you can buy a property and get into the property market, the greater impact that's going to have on you for the future wealth building benefits for you and your family by having property in Australia. The risks and things to be concerned about is that because there are more people entering the market in this price range, because if you look at this band here between say $650 and $850, most people's income are starting to max out up here. We're entering into real high income earners here in Australia, so there's going to be a lot of demand on these property prices in this range. So this is really going to be an interesting thing to see what happens in relation to the risk of pushing up property prices to unrealistic values. Because if you've got a lack of supply and you've got a lot of people trying to buy property, what is supply and demand? A lot of demand, less supply pushes up prices, which can also cause issues with incorrectly valued properties and also impacting our inflation, which is another conversation. Now, here's the other thing that you need to be aware of. Let's say you go and buy an $850 property, but it's actually only valued at $820 because the bank will do the valuation. What happens is, under approval lender policy, it is contract purchase price, what's on the property contract. So let's say on the property contract, it's $850,000, but the valuer values it $820. the bank's policy, price or valuation, whichever is the lower. They will lend a percent of money against whatever the lower figure is. So if you're buying a property at 850 and it's valued at 820, they will do their numbers and borrowing of 95% against the 820. Now, that is why it's very, very important, as I've put down here, tips for preparing is always make sure your contract is subject to finance. Do not go into an auction where you haven't got pre-finance approval. Actually, let's go through the tips. Firstly, verify if you're going to be eligible and this type of loan scheme works for you. So reach out to us. We can run the numbers, answer a few questions, ask a few questions, and we will know within about whether this is a suitable loan scheme for you. Whether this is we'll be able to know if this is a suitable loan scheme for you, or if it's not yet, what is it that you can do to start building your savings and put things in place so it can work for you in the near future. For example, I've got a couple and they are my clients and they're friends. Now, they're not quite ready yet, but they're now saving their money. We've done a budget. We've cleaned up where all the wasted money's going, and I've shown them and taught them a little system for how to manage their money, put money away every week into another account so that they can show that they are building up genuine savings. So come around early next year, we'll be able to apply for our loan, which is to get a pre-approval. So we know what their borrowing capacity is. And I've got a fair idea because I've done the numbers, but it's really helpful to have a pre-approval in place so you can go shopping with confidence. As opposed to another couple I've been speaking to, they said, oh, we're not ready yet. When we've got some savings or we've figured things out, we'll come and see you. Now, I have experienced clients like this in the past where they call me and they go, we found a house. We want to buy it. It's going to auction. And it's like, whoa. We need time. We need time to put things together. There's a saying, fools rush in. Don't be a fool. Be smart. Get prepared. That's why it's important to do this preliminary work to make sure that you're in the right position so you can go out to market and you can go and look at the properties that are going to work for you and what you're approved and your budget and all these things that we do. Okay. The other thing is conduct your research. Make sure you've got a really good understanding of the price of properties and what they're worth, and don't go overpaying for properties because you could potentially, especially if you're signing contract, don't sign contracts that are unconditional. Always sign property contracts subject to finance, pest and building. Okay, so that gives us an opportunity to make sure that we can get the valuation done, get a price, and then we can know whether it's going to be valued on the money and you're going to be able to buy the property and sleep well at night because you've bought it at the right property. Or if not, we can get out of the contract so you don't go and have to find money that you don't have to buy an overpriced property because of supply and demand that's occurred in the market. Now, I know this isn't always easy because what's going to happen with this, I feel, is there is going to be a bit of that cat mouse and, oh, we're going to get the property and please help us and blah, blah, blah. This is where, again, calm. There's always a property. We'll always find a way, but don't put yourself in a situation where you've got to find money that you don't have. If you've got the money, great. If you've got some room to move, great. That's fantastic. But if you don't, well, just be very, very wary of not putting yourself in a situation. And of course, we can help you be very clear on what you need to have in place. Okay, so that's an overview of the first home buyer government guarantee scheme loan. Let's just touch on the key points. What's important to remember is it's not just about 5% deposit. There are costs and fees involved. And at the bottom of this guide here, it does have a breakdown of the table that you can refer to and see all the figures. And your income also matters. So your income here matters. What other cards or debts that you've got matters. Genuine savings matters. But You can do it. If this is important to you, you can do it. You've got time. Let's follow the bouncing ball. Let's do the right thing at the right time. Reach out. My details are in the details below. If you want to copy this guide and a breakdown of this table, we can have a conversation. Find out what you want to do, what you've got, get a plan going, give you a copy of this, and make sure that you do things the right way and be on the front foot. Because when you're on the front foot, meaning you're in the right position, it gives you more confidence, you can negotiate better, and we can help you buy the right property that's going to be best for you and your family and your future wealth building opportunities that come by owning property in Australia. Thank you, Trevor Russell, Results Investment Group. We can help you with your first home buyer loan. We can help you find the properties. We can help you with the home parent equity loans, self-managed super fund, commercial investment, personal loan, asset loans for the right people, all that good stuff. But most importantly, what I'm very committed to is that we are money smart, that we know what we're doing with our money and making sure that it's putting you in a position that is forwarding you and making life better, and not putting you back. And that is why I do love property. In all the things that I've invested in and done over the years, nothing has beaten property. And that's why I am very passionate about helping people have the right information so they can get into the right properties and build wealth, because buying your first home is just the beginning. There's so many wonderful things that you can do with property, and this could just be the start of a very, very exciting retire rich, live a prosperous, happier life moving forward for you. So thank you, Trevor Russell. Real pleasure to help you make all your financial goals and dreams a reality. Speak to you soon, reach out, and let's do this. Ciao for now.